Yeah, so there's actually two meetings that are being openly discussed that I think are providing a lot of headline risk for investors and the sector. And essentially, there's the first one is whether there would be an emergency OPEC meeting, and that's being pushed primarily by the Venezuelans, the Algerians, and the Nigerians. And essentially, in this low price oil environment, they're struggling, and they don't have the currency reserves that Saudi Arabia or UAE or some of the other Gulf producers has to sort of weather the storm. So the Gulf producers don't want to have a meeting. They're trying to head it off. They may have to acquiesce just to placate the concerns of their fellow OPEC members, but we think there's probably a slim chance of a meeting, and if there is one, it's really just a talk. The market should not anticipate any kind of change in production or a production cut resulting from the meeting. The other meeting that's being getting more news attention is this idea of Russia and OPEC meeting to discuss some kind of coordinated cut. And it's really being pushed by the Russians. It's not anything new. We've heard about this before the June OPEC meeting last year, and of course, just in December before the December OPEC meeting. Each time the Saudis have shut it down, the Saudis of course say, if there's going to be a cut, it has to be shared by everyone, and by that they mean OPEC members like Nigeria and the others are pushing for the emergency meeting, but also non-OPEC, and it just doesn't mean the Russians. I think they expect the Mexicans and the Colombians and the U.S. to participate. Now, there's no oil minister from the U.S. who can command that the U.S. Participate in such a cut. So that's why the Saudis are pursuing this market share policy to enact their own production cut from the U.S. sector through prolonged lower prices here. So we think there may be even much or a little better odds of a OPEC non-OPEC meeting, as compared to the emergency meeting. But still, I would caution not to expect any kind of production cut resulting from any meeting along those lines. I think one of the other reasons why, even if they could agree to a cut with the Russians, it's really too early for a cut, and that's because the Saudis believe that their strategy is winning, and they've already seen sort of a slowdown in U.S. production, and really, every week we're hearing about capex cuts, and just this week on Tuesday, ExxonMobil announced 25% capex cut additional for 2016. They put a hold on share buybacks. This is kind of music to the ears of Saudi officials in Riyadh. This is the type of, they want to see another year of this type of activity. Big capex cuts, major mega projects being delayed, and that's really what they're going to watch. And then I think towards the end of the summer, I think we'll be in a position to see, what does U.S. production look like? What does OPEC production look like? And then we might be able to see, a point at which the Saudis in particular and other Gulf producers would even consider some kind of production cut. So in terms of, looking forward, I think, there's another OPEC meeting in June. Again, we're not expecting any kind of emergency meeting in the interim, but we don't really think that it'll be ripe to have a production cut in June. I know there'll be a lot of drama and rumor mongering again about that, but it'll cause a lot of volatility. But ultimately, we don't see any kind of change in policy regarding production. The real meeting of any consequence will come in December, and it'll all depend on where we stand on non-OPEC production, and particularly what's going on in the U.S., with an emphasis on U.S. shale. But I think it's too early for us to make a prediction on that December meeting and what might happen. I think we, just like the Saudis, want to look at the data, probably take a visit to the region, and so we could, get a better feel of what their thinking is. Yeah, there's been a lot of activity since we did that call and we put out that note. I think that the biggest point is that the Iranian conference to unveil their Iran petroleum contract that was going to happen in late February has been postponed. We think it's been postponed until May. The Iranians are saying it was because they couldn't get visas for members of their delegation from the British embassy, but I think there's been pretty legitimate media reporting that essentially there is not an agreement within the Iranian government on how sweet the deal should be for foreign, international energy companies, and what the structure of those contracts would look like. Obviously, they want them to be attractive in order to encourage international oil company interest in the sector and investment. But the Iranians, like other countries, don't want for international entities to actually own reserves. So they're trying to strike the right balance. I suspect it'll be resolved quite quickly, and maybe even the meeting can be, moved from even May to an earlier point because they're quite interested in getting this thing launched. But it would be a mistake to think the cancellation or postponement of that conference has anything to do with the short-term production. That's really about long-term investment and getting back to pre-sanctions levels of production. Really, it doesn't affect short-term production. Iran can do that on their own. And, as we've said, we think they can do as much as 700,000 barrels a day by the end of March. And to that end, Total of France has announced a deal a week ago when the Iranian president was in Paris that they would take 150,000 to 200,000 barrels a day. So, we're just in early February now, and you're seeing that type of deal announced. Also, Reuters had a story last week talking about production in January or exports in January and February are up about 20% from last year. So that's a significant point. And for example, India took in January about 183,000 barrels of Iranian exports, and in February they're looking at 300,000 barrels. So significant increases, and we expect to see more evidence of ramping up of crude exports. The other big issue is regarding sort of tanker insurance, and we've seen that the international insurance consortium that provides insurance for tankers and the shipping industry has been holding discussions with the U.S. Treasury Department about some kind of short-term fix to address concerns in the industry about insurance. Ultimately, they're going to have to, get some kind of license from the Treasury Department. But I think they can come up with something short term. And I think I mentioned this in our call that we had, that this is a very high priority for the Iranians. They realize this has to be addressed. My guess is they're pressing the State Department and the Obama administration to come up with some kind of solution. And I expect that they will get some kind of resolution fairly quickly here.